come on. You got stopped out, bro. Hey guys, it's Matt. I wanted to do another skeptical video. This time the YouTuber is Scarface Trades, and he just posted this, I think yesterday, a video titled How I Made $100,000 in Trading in 1 month, so you can just copy me, full strategy. So I'd like to see what he's given us here. When I do these videos, I'm not here to call anybody out or say anybody that is a fake trader or a furu or any of that stuff. It's really just to kind of try to assess the truthfulness or the veracity of the claims made in the video and see if there's anything we can actually learn, especially if you're a new trader. Is there stuff that you can actually take away from the video and learn something from? So let's jump into what Mr. Scarface has for us here.
In the month of June, I made $132,000 just from day trading. In this video, I'm going to share the complete process on how I find the stocks I want to trade intraday, the exact strategy I use to trade the stocks, and the risk management strategy I use to make consistent profits in the market.
Cool. I like what he's doing so far. The fact that he mentioned risk management is huge, because that is your job as a trader. Your number one job is to manage risk. The entries and exits and all that other happy stuff that comes with trading is fine. You have to be good at that, but absolutely the top thing, you are a risk manager.
Market. I want to provide as much value as I can for free in this video, so by the time you're done watching this, you can copy the exact framework to see more consistency in your trading. So how was I able to make $132,000 live?
One quick thing, he might get to this. Again, I haven't seen it yet, but just saying you made $132,000 a month is not very helpful if you don't know what his account size was to begin with. If his account size was 132,000 and then he doubled that in a month, that's pretty freaking impressive. If his account size is, I don't know, 100 million, it's a little bit less impressive. Although, I mean, who can't live on 132,000 a month, right? But let's see if he gets into that.
In front of hundreds of students in just 1 month. Well, in this video, I'm going to break down everything so you can create your own system from scratch by following me. So the first thing we have to talk about is how to find an A+ trade setup daily. Now, for me personally, to find one quality trade setup, I look for two things. Number one is the higher time frame, and number two is market structure. Both of the things I mentioned here, I have multiple in-depth guides on exactly how to identify a proper higher time frame and proper market structure.
For the sake of time, guys, I'm just going to speed this up a bit.
But in this video, I'm going to give you a summary as well, just so you understand how to find an A+ setup. Before the market opens, what I like to do is go on the higher time frame, and I like to see which way we're trending. Now, this is very important because whichever way we're trending is the way I want to take the trade. So as we know, we have an uptrend, a downtrend, and
the trend is your friend, as they say.
Sideways action. And if you guys have watched my videos before, you know I typically do not trade sideways action. I try to eliminate that out of my trading system. Therefore, I trade the bull trend and the bear trend. Now, in terms of the bull trend and bear trend, I am not someone who is an aggressive buyer. I am not buying breakouts. But what I like to do is buy the conservative buy. The conservative buy is the previous breakout level turning into a level of support. This gives you the lowest risk entry, but also it allows you to have the highest reward. So the main thing I'm looking at for a quality A+ setup on the day is which way is a higher time frame trending. For me personally, an uptrend or downtrend is what I'm going to be looking at more in specific. And of course, when we go look at a real example, this will make much more sense. But before we do that, you need to understand what I'm looking at. So it needs to be an uptrend or a downtrend on the higher time frame. And after that, I'm looking for...
It's actually really, really great so far. Definitely looking for a trend. Really, whether it's on the higher time frame or the same time frame, like if you're a swing trader and you're just looking at the daily time frame, you just want to see that trend. You can look to the weekly chart, but seeing the trend on the daily chart is often enough. But in the smaller time frames, if he's day trading, yeah, I can see maybe looking for the higher time frame to notice the trend and go from there.
Specific patterns. Now, these patterns help me see what other buyers and sellers are seeing on the stock. So we know that after an uptrend, the stock has two options. One is sideways or consolidation, and two is to pull back. So if the stock after a big move up has a consolidation period, or after a big move down has a consolidation period, that shows that the stock is going to most likely continue in the direction it's going because it's not pulling back. In this example here, that means the buyers keep buying the stock right near the new lows. So every time we come near these lows, the buyers are buying buying it up, and therefore they're keeping it in a range. And as we know, the tighter the range gets, the more likelihood of a bigger or an impulsive move to either side. So in this example here, this would be a bullish flag. We can see an impulsive move to the upside, consolidation, and then a breakout. Now, some of you guys may be asking, you just said that you don't.
I wouldn't say those things so matter-of-factly. The market can do whatever it wants. It doesn't have to follow patterns. I mean, we've identified patterns over years and years because they happen over and over again, right? And so at some point you go, oh, I've seen this before. But just because a consolidation pattern tightens up doesn't necessarily mean you're going to see a big explosive move in either direction. It could tighten up and then just kind of flounder away. It depends what's going on in the underlying stock, right? I mean, if the volume is still there, if the interest is still there, yeah, it can definitely explode out of a consolidation pattern, but it doesn't have to.
Don't trade consolidation, and that is correct. I am waiting for this consolidation to break. What I'm looking for is that the stock breaks out of this range period that we had. Now, this range could be on a 4-hour time frame, a 1-hour time frame, or a daily time frame, but we're simply waiting for the range to break out. And then after it breaks out, I'm waiting for a retest of that range. Now, the reason we're waiting for it to break out is to continue the trend in the direction it's going, and this just gives us a little bit more of a higher probability entry. The reason I do this is because this gives us room for error on the human mistakes.
Do you ever wonder why somebody who makes $132,000 a month day trading would bother to have a YouTube channel? I'm not saying that he doesn't. I'm just, I don't know that I would still be making YouTube videos if I was making that much money as a trader. Maybe it's just me.
We could potentially make. Now, I call it the triple E's: entry, exit, and emotion. The reason I call it this is because in this scenario, what happens is, and we'll see when we actually look at the strategy itself, sometimes you may be wrong. You may have entered too quickly. You may not have exited as fast as you needed to, or you may have held past your exit, or sometimes you simply can't get into the trade because of the human emotions you're feeling, maybe fear, maybe greed. And based off those human mistakes or human emotions that we're feeling, we need to have a system that allows for error, especially if you're a new trader. You will make errors as a new trader, and therefore when we're
really quick, that's a really important point. Actually, the human emotion side of getting in and getting out of trades, I mean, that's really the reason for most people trading is as difficult as it is. It's not, has nothing to do with figuring out the markets or finding setups or any of that stuff. It really has to do with being able to accurately what's the word I'm looking for? Execute a system once you discover it. So because all kinds of things will, fear and greed and FOMO and Ikimo and all that stuff will come into play and make it harder for you to execute that system.
Looking for A+ trades on the higher time frame, because the trend is going in our direction and the stock has just had a breakout, that usually means that there's going to be momentum intraday that we can trade, and therefore we can make human mistakes on our entry, exits, and even have some sort of emotions. As a new trader, you will have emotions. However, you can have small human mistakes and still have profitable trades, and that's why finding A+ setups on the higher time frame is crucial. Now, once you know which stock you're looking for, there's multiple different setups that I like to trade, but one of them is the pre-market high and low strategy. Number one, we need to mark out the high from 4 a.m. Eastern to 9:30 a.m. Eastern. These are pre-market levels, and there's liquidity sitting near these levels because this is where the most liquidity before the market opens was, because it couldn't break above or below. So for us, we want to mark out the high.
I'm not sure about the reasoning there, just because volume tends to be so low for many stocks, at least during post and pre-market hours, that is there really that much liquidity there? I mean, there wasn't really that much volume traded there in the first place, so I don't know that the liquidity is so great. But it doesn't mean it doesn't work. I'm just saying that the reasoning there just doesn't make sense to me.
And the low of the pre-market levels. After this, we're waiting for the stock to break and hold either levels. So in this example here, we can see that that same example we had previously, we broke below that pre-market low, and as we can see, we held and then we retested with a weak price action candle. Now, it is so important that we enter on strong price action of the retest of pre-market high or low, depending on if we're bearish or bullish going into the day. And then we're looking for targets either at high of day / low of day or higher time frame key levels, which we'll look at a little bit more more in the examples as well. And finally, we're going to keep our stop loss at a break of market structure. So if we can look at this example right here, we came back, we retested, we got a weak price action candle, we enter in on the weak price action candle with our stop loss at high of day because that's the break of market structure, and our profit target was a previous day low level. This gave us a 2.
So it's interesting that his entry there is on the open of that weak price action candle. But you don't know it's a weak price action candle until the close is formed, right? Because that's, you could call it a hammer candle. Maybe it's got a pretty good wick up there. Actually, you know, it's got a wick here and then this red body here, but it closes down here, right? Based on the fact that it's a red candle, so it closes lower than it opens, right? So how is the entry at the open of that candle? Because you wouldn't know. You wouldn't know anything about this candle at that point. So how would you get in there? That doesn't make sense to me.
0.6 risk to reward. This means if we were risking $100 on this trade, we would have made $260. Now, in terms of risk, how do I manage my risk in the trade? When I'm looking to manage risk, on average, every trade I take is a 2R multiple. This means every $100 of risk equals a $200 reward. What this means is I can have a 50% win rate and still be profitable. It also means I have room for error, as a higher win rate will increase profits, but a lower win rate would not hurt profits by much.
Yeah, this is great. I mean, I love that he's using R multiples here, and if you can get a 2-to-1 risk reward and a 50% win rate, yeah, you're doing okay there, right? I love it. Yeah, that's good advice. If you can find those things.
So in this scenario here, like I've showed you guys before in multiple videos, you don't need to have a super high win rate to be a profitable trader. That is a myth. You need to have balance between your risk to reward and your win rate. As long
Yes. I love it.
as you have the right balance, you can be a profitable trader. So in this specific strategy that we're going to talk about today, the win rate is a little bit over 50%. However, even with a 50% win rate and a 1 to 2R multiple, meaning we're making $200 and we're only risking $100, we would be in profit. Even based off of human errors, if we do not have a 50% win rate and we drop to a 40% win rate, we will still be in profit. And of course, if a 60, 70% win rate occurs, then we would still be in more profit. So at the end of the day, with this strategy, as long as you even have a 40% win rate, this means out of 10 trades, you only have to win 4 trades. With a 2R multiple, you will still be profitable. And that's the beauty of this strategy, is that you don't need a high win rate, but when this strategy does work, you will make much, much more profits than you're losing trades. So with this being said, I just went over my risk management, I went over the strategy we're looking for, and I went over exactly how to find an A+ trade going into the day. But now,
one thing I would love to see here, since he did an entire month, apparently with this strategy, I would love to see his actual performance for that month, and I would love to see performance for many months or years of this strategy, because if it's a good strategy, it should work all the time, right? Not just on one month where we've had a good bit of bullish action going on in the market.
now we want to go look at a real trading example to really tie everything in. Okay, so here we are on Nvidia, and as we can see, we are on the 1-hour time frame. Now, the number one thing you want to look at on Nvidia is that we were making clear highs right here, and we continue to make those clear highs. And along with this, we were also making these lower lows as well. Now,
Completely irrelevant side note is, like, I remember I saw one of this guy's videos a long time ago, and he was trading Nvidia, and he was calling it Nvidia, and it was driving me crazy because I, in my head, pronounce it Nvidia. And so now I notice that he's on team Nvidia, which is good. It's good. It's good to come to the good side.
after we've identified that the stock is in a clear uptrend, and this one was very easy because we had an impulsive move to the upside, some consolidation, and then a push up. We had a little bit of a pullback, but then we pushed right back up, and therefore we know that we are in a clear uptrend on the 1-hour time frame. Now, after we understand that, we're looking for a flag pattern or just some sort of consolidation. On Nvidia here, we can see that we have a clear flag pattern right here. So we need to break above this flag pattern, and we have a clear consolidation level right here, and this is what we need to hold. So this is the low that we need to hold for a continued push up on Nvidia. So on the higher time frame, all we're looking for is just a big push up or an impulsive move to the upside, showing that the stock is indeed in an uptrend, and then just some consolidation. Now what I would be looking for is a move or a break above this level, and then I would be waiting for pre-market high and pre-market low to finally develop, and then I would be waiting for the pre-market high break retest of pre-market high for a push up on Nvidia. So with this being said, now what we have to do is go over to the pre-market levels. And when I came over to the pre-market levels here, we can see that the stock actually did end up breaking out of our levels. So now we have a clear move to the upside, and we're also gapping up on Nvidia. Therefore, this shows that the stock is indeed in an uptrend, and we're now just looking for the most lowest risk entry. Now, for me on this trade right here, all I would do is mark out the pre-market high up here and then the pre-market low down here. And from this here, all I'm looking for is a break above pre-market high, a retest into pre-market high, and then a continued push to the upside. So let's play out this trade and see exactly what happens. All right, and right here, what we can see is we broke above the pre-market high level, and now we're retesting. So when we are retesting this level, we can see that we're at that 123.52 pre-market high, and we can see that the stock is actually trying to hold above this previous level. That's what the wick is showing us. It's showing us that the sellers try to bring it below 123.52, but the buyers were able to hold it above that level. So for me, how would I enter into this trade? Well, I would be looking at a long position here, and my stop loss in this scenario is just going to be a
Once again, interestingly, his entry is at pre-market high. It's just, I don't know how you would necessarily get in there. I would like to see it at the close of that candle, which is just a scotch above that, but I just don't know that you would know to get in at pre-market high when you see it. You know what I mean? Because the candle's not formed yet, so you don't really know how that candle is going to look.
Candle close below the low of day. So this is low of day, and my stop loss will be a candle close below this level. For our profit targets here, we can scroll out and see the higher time frame levels, and we can see that Nvidia's all-time highs is actually up here at 125.60s. So if we move this all the way up to 125.60s, this gives us a 2.62 risk to reward trade on this entry. And like I've talked about before, we need an average or a minimum of a 2R multiple. So let's enter into the trade here and see exactly what happens. Right here, I do want to mention that we came near our stop loss level. However, we actually did not close the candle below that level. It's simply
Come on. You got stopped out, bro. Like, I mean, the rule didn't say anything about the candle having to close below the stop loss. Because, I mean, what if you had a candle that just dropped below and closed way lower than your stop loss? Then your risk is not where you said it was, right? Like if this candle just plummets and ends up closing down here somewhere, I don't know, the 122, what is that, 122.12 area, let's say. You know, now your risk is this big part, right? All the way down to here, not where you said it was. This is a stop out by any definition. I don't understand. Please tell me he shows us all his trades for the month.
simply wicked and then came back. And this shows that the buyers are still there near that low of day, and therefore we would have not stopped out of the trade. I've said this in multiple videos. I do not stop out of the trade unless the candle closes below the level. So let's keep playing.
Okay, that apparently that is a rule of his. I didn't know, but also still, I don't understand if you're then that's not your risk level. Your risk level is the close of that candle, which could be a lot lower. So I feel like that's bad. That's poor risk management.
Playing out the trade. We can see here that the stock broke above high of day, and now it's currently consolidating or retesting this previous high pivot level right here. And just like that, we were able to hit that 125.60 or that all-time highs on Nvidia. And this was a $1,020 trade by simply using the pre-market high as a retest and understanding how that consolidation period on Nvidia allowed the range to get a little bit tighter. And because the range, by simply using the pre-market high as all-time highs on Nvidia, and this was a $1,020 trade.
Okay, so $1,020 trade. I forget how many R he said this was. Looks to be about like 2.5 R or something, right? So yeah, I mean, so he was throwing some pretty good risk on there, right? Again, it's all about how much you have to risk, and then right. So saying you made $1,000 doesn't matter to somebody who's got an account that's much smaller than you and their risk tolerance is way smaller. But anyway, it's still a good trade. I mean, honestly, going long in Nvidia lately has including today. Today's Wednesday, the half day before the 4th of July, and out of nowhere it just ripped today. But that's what Nvidia does lately, right? So yeah, going long Nvidia is a good strategy right now.
By simply using the pre-market high as a retest and understanding how that consolidation period on Nvidia allowed the range to get a little bit tighter. And because the range got tighter, we were able to get the impulsive move to the upside and have strong momentum on the day to actually make profits on Nvidia. And this was once again a $1,020 trade. So in this video, I broke down the framework step by step on exactly what you want to do to copy a winning trading system. Of course, at the end of the day, you need to refine the system to be your own. You need to backtest the data as well. But I hope this puts you on the right path. If this video helped you, make sure to leave it a like. If you have
I was kind of underwhelmed with that, honestly. It definitely wasn't what I would consider a full strategy. I mean, it's a good primer on a full strategy. Very like an introductory course to it, but I would love to see some more back tests to show one trade that worked out really well. It just does not. It's not proof that it's a good system. And he says, oh, he's been doing this in front of hundreds of students or whatever, and he made a bunch of money this month. But show data, show all of your trades. Just list all the trades you took this month, and let us go back and see them. Right? And go back in our trading platforms and look at each day and see what you did in hindsight, right? That seems to be easy enough to do. So, yeah, that's kind of a bummer. I was expecting a little bit more out of this, but anyway, hope that helps a little bit to kind of know what to be skeptical of and just see things with a really critical eye. And we'll be back for the next one. Take care, guys.